You're watching today's Daily Market Comment by Mario Sujikiriakos. I'm Christina Marujos and thank you for joining us at XM.com. Global markets breathed a sigh of relief on Thursday as risk appetite returned to some degree, but it was not meant to last, with the meltdown in equities resuming today on the heels of a barrage of earnings by the world's leading tech firms. Apple, Amazon, and Facebook all reported blockbuster top and bottom lines that blew consensus expectations out of the water, and yet their shares crumbled in after-hours trading. This is the main element that is dragging all of Wall Street down today, with futures suggesting a 1.5% loss for the S&P 500 at the open, more than wiping out yesterday's 1.2 rebound. Frankly, that the world's biggest companies can report blowout earnings and still crash is a massive red flag for what lies ahead, as it implies that an incredible amount of optimism has already been priced in. The currency market is a different story, though, with the dollar climbing alongside stocks yesterday and barely rising today, even as equities crumble, which is a strange divergence. This divergence may come down to the euro being exceptionally weak. The single currency fell across the board yesterday after the European central bank sent the clearest signals ever that more stimulus is coming. President Lagarde offered a downbeat assessment of the virus-stricken economy and stated that the ECB will calibrate its instruments in December, something that was unanimously agreed. This argues for limited upside in euro-dollar going forward, though admittedly the pair could still shoot higher next week on a landslide Biden election victory, as speculation for king-size U.S. stimulus packages ramps up. With the same logic, though, the pair could also sink lower on a contested election. The highlights today are the Eurozone's preliminary inflation stats for October and third quarter GDP. The spotlight will be on inflation as the bloc's core inflation rate hit a record low in September, and any more weakness today could fuel expectations for the ECB to come out with a bazooka at its next meeting. In energy markets, crude oil remains under tremendous pressure as the lockdowns in Europe suppress the demand side of the equation, and the increasing production in Libya and elsewhere dampened the supply side. This was today's Daily Market Comment at XM.com. Have a great weekend.